So these days, if you mention the word investing, quite a few people get upset. It feels like the word investing has now become a taboo. Now, looking at my trading 212 stocks and shares ISA, we can kind of see why, because over the past month, my investments are down by 5.8%. And that is a loss, for me anyway, of £6,559. Now, if you think about it, 5.8% loss is a huge amount. And if I go back to 3 months, we can see that the rate of return is even worse. We've lost 6.3% or around £7,143. Now, comparing my highs of around £116,000 to my lows of around £96,000, that is a drop of around 20% or £20,000. Now, the reason why people are so upset is because if you put your money into the bank or into something like a cash ISA, the value of your holdings won't go down and you can get a more guaranteed return of currently 4.5% annual equivalent rate. Do bear in mind that rates are correct at the time of filming and this is a variable rate, and this becomes very important in our discussion today. Has investing become a taboo word, and should we move all our money into a cash ISA? Now, of course, as usual, if you would like a free fractional share on Trading 212 worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you signed up to Trading 212 in the past 10 days but have not received your free fractional share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code. And in this section, just enter my code JUBAIR. So I'm not going to lie to you, it has been an absolute bloodbath over the past 2 months. Seeing my portfolio pretty much every other day just going down and down. And this is not just for me. Investors all around the world are feeling the same pain. Daily losses of over 1% have become the norm. And it feels like putting money into investments right now is just putting money into a black hole and watching it all just, fall into the abyss. No returns seemingly to be made anywhere, anytime soon. Now, I can show you that, if I go into the maximum, that even with this downturn, I am still well above, what I have invested in. Unfortunately, my Trading 212 net deposits are not correct because I have transferred an ISA twice actually, so I've lost all my statistics. In this stocks and shares ISA, there are around £80,000 worth of deposits. However, that £80,000 didn't just come out from thin air. That was the accumulation of, capital gains and dividends from investing back in 2021. In total, I would say in my stocks and shares ISA, I probably have deposited £50,000. And you can see since 2021, I'm still over 100% up, which I think is a great investment. And we're going to compare, what we can expect from a cash ISA compared to, the stock market. Now, here is my Trading 212 invest account. Over the past 3 months, it is down by 3.9%. So not as bad as my stocks and shares ISA, but pretty bad. Why would you want to lose 4% when you can get a guaranteed 4.5% with a cash ISA? However, when I do change the maximum axis, you can see that my total rate of return has been a positive 60%. And that, in terms of pounds and pence, has been a positive £5,875. Now, of course, you guys know that I am, an investor, not someone who would be putting money into a cash ISA, and definitely not just a high street bank. Now, of course, my main reason as to why I would not put my money into a cash ISA is, of course, that you only get a £20,000 per tax year allowance. That is shared across your different types of ISAs. So if you put £20,000 into a cash ISA, you can't put that £20,000 into your stocks and shares ISA. And of course, if we look at, past performance, which has to be always taken as a grain of salt for future projections, the stock market has always beaten out cash in any significant time period. Let's talk about any 10-year time period. Pretty much 99% of the time, the stock market has beaten out cash. Now, currently, we are at a time with very high interest because the Bank of England rate is high, the US central bank rate is high. However, we can't keep continuing to expect, 4%, 5%, or even 3% over the long term. I think is very unrealistic. Now, let's consult our very handy compound interest calculator. Now, a lot of people have asked me why I don't just move my £100,000 into a cash ISA where there is guaranteed returns. I do say guaranteed with quotation marks because, of course, the rate is variable, and I definitely do expect in the next 5 years for that rate to go very, very close to 1% or lower. But anyway, let's put in 100,000, 100, and then 123. And let's see, with 4.5%, what we can expect in the next 10 years with £100,000 invested into a cash ISA, assuming the rates don't change, which is extremely unlikely. Now, as you can see, in 10 years, that projected value is around £156,000, which does not seem too bad, very, very low risk. £56,000 in 10 years, that's the interest that you gain on that. However, like I said, over those 10 years, the average interest rate is, very, very unlikely to be 4.5%. Let's say the average is going to be dropping down to 2%, which I think is more realistic, although I think in the long term it will be even lower than 2% because that's still pretty high. Now, that projection falls all the way down to £122,000. This is assuming I don't put any further contributions in, because why would I? I just transfer it, just leave it, and hope for the best. Now, the stock market is very risky. You do put your money at risk for potentially higher returns, and if I use 8% as a long-term average, we have seen that from the past, although past performance does not guarantee anything. Let's see what we can expect with £100,000 invested without further contributions. Now, we can see the difference in 10 years is staggering. We could be looking at £221,000 if we had an annualized return of 8%, which again could be unrealistic. It could be very realistic. We can't see 10 years into the future. But in terms of interest, that is basically an extra £100,000. Granted, you are going to be putting your money at a considerable amount of risk during those 10 years. But without risk, there really isn't going to be much reward. And as we've spoken about before, the rates on the cash ISA could drop significantly, and we don't know what the future of investing is going to hold. What if there is a new revolution and the returns that you get per year are 50-60%? We actually do not know, and that is the whole point of investing. You see, if it was easy, everyone else would be doing it. It's not nice to see my portfolio go down by 30,000 pounds combined. It really isn't nice, but I completely understand that this is what we get for our risk. Sometimes we do get rewarded really, really nicely, and my portfolio is a testament to that. Although the statistics are wrong, I'm still, after this stock market crash, still up from my investments. And in my opinion, this represents a great opportunity for me to add further money into my investments. And I have been doing that, just not with my trading 212 stocks and shares ISA for now. And I will be, when I get the time, updating you guys on that. So make sure to check out some of my other videos, and I'll see you in the next video.